Today, 2nd of August, market opened with a huge gap and thereafter was stuck in a trading range down 38 point at 3381. Now this is probably in reactions to the overnight rout in the US market. However, weakness was actually seen yesterday with a wide range reversible on increased volume. So today's weakness is not unexpected. The only thing is the extent of which. It's right now flirting with this support level here at about 3387. Our immediate support is the opposite of this gap, which is at 3370. Immediate resistance is over at this level here, that is about 3419. This is the 50-minute charts of the STI, very obvious after the huge gap, and it was generally stuck in the trading range. Let's take a look at the US markets. This is Nasdaq, and this is the market index that actually suffer a much deeper corrections. So you can see actually we do have a wide range reversal bar. However, the current weekly bar here has a smaller body. It does indicate that there is some selling has been actually dried up. But whatever the case may be, it is important to watch what happens going forward. Today we do have the non-farm payroll, and the market is likely to be volatile. However, we do have support at this level here at about 16,500, so this is a level that is important to watch. S&P appear to be more resilient. So again, it is not out of the wood at this moment, so we'd like to actually watch particularly this level here at about 5,300. It's important that this level hold. If you take a look at the NYSE Composite Index, which represents the 2,000 big cap stocks, it appeared to be more resilient. However, we do see the rejection of high. This is an indication of weakness, but we have not seen deep retracement as we have seen in S&P 500 and Nasdaq. This is 10-year Treasury yield. Notice actually it broke the lower channel lines, and you see actually very strong reactions from the banks. So going forwards, this is a negative development, and we may see further downward move. Particularly actually the Federal Reserve indicate that they may cut interest rates in September. This is Brent crude. Now there are some talks about hard landing in US and poor demands of Brent crudes from the Chinese economy. And you can see actually we have deep retracement, and in fact it actually broke this very significant support level almost with ease. And right now we experience a throwback and followed by a wide range reversal bar. Our next support is actually at this level, slightly above $77. But whatever the case may be, the weakening of Brent crudes will generate augur wells for the economy in the sense that actually it's not likely to forward inflation. Now let's go back to our local markets. Today we have seen very weak showing among the major stocks we've been actually discussing. First, the bank stocks, and it's pretty obvious most of them open with a gap, and in this case here is a huge gap testing this support level. Now over here we have a deep retracement followed by a weak bound, and we can see actually on several occasions you were not able to close well, and the volume also was not inspiring, and we have bear bar that is much larger than the bull bar, so it's a sign of weakness. And right now with this gap here, this offers a fire resistance. But whatever the case may be, it's already lost its actually trend characteristics, trading below 1326 SMA, and the 1326 are not well placed. So we may expect a throwback from here to attempt to close these gaps, and perhaps if we roll down particularly below this support level, we can look for opportunity to actually short. Mentioned in the previous videos that if the stock are not able to actually trade sideways, the bet is probably off, and it's better to exit and stand aside. This is OCBC. Perhaps it's actually slightly better after the release of result. It provides some support, but whatever the case, it's actually trading below 1326 and not in proper order. Taking a look at the weekly charts. Now, unless we see a very strong upward move from here, otherwise it may continue to actually retrace, closing up the daylight. Mentioned the UOB is actually attempting a break at the resistance level, but unfortunately it have deep retracement, so it's more likely to actually stuck here or retrace further. The attempt at this resistance level is not likely to be anytime soon. Singtel has probably run his course. The stock is almost gravity defying. So you notice that you've been trading very nicely. 1326 opening and diverging, and over here you're not able to make any headway. Now this is dividend gaps, and right now trading a small bar, so it's a sign of weakness. Now usually after a strong run up like this, you'll need a period of normalizations, so it's not likely to perform on a short-term basis. So it's actually better to just watch for further setup subsequently. SET appears to be holding well despite our weak market sentiment. So this is what happens. It has a gap up 3 days ago, followed by a pullback here. Volume is actually lower, if you notice. And today, despite weak market, managed to actually hold out. In fact, a small gain. So this may well be part of a consolidation patterns, something like this we'd like to see. And I would like to see eventually take out this high after the consolidation, and this is at 335. With the weak market sentiments, it's important to look at stocks that are holding up well, because once the markets finish its corrections, the stronger stock will likely to rally. Now I also mentioned that SIA, the bet is off if it's not able to actually hold up well, and this is what happens. After the previous videos, we see actually there was a attempt at this support level, and we also see the increase in volume. So this is a negative development, and usually do not hold position before announcement of result, and this is what happened after the release of result. It actually gapped down, and today we have a follow through. This is extremely a huge gap. We're likely to look for a throwback, likely to throw back. During throwback, look for setup to short the stocks. Yangzijiang. Prior to today, price actions, stock was actually holding very well, but unfortunately, probably in reactions to the general market weakness, we see a wide ring reversal bar. The only consolation is that despite a long bar, we do not see a significant increase in volume. So this indicates actually nervous selling, as right now is testing this support. Now, unless this hold, otherwise the bet is off for the stocks, and again, we probably better to stand aside, exit position and stand aside. Centurion stock actually held up quite well. At this point in time here, we have a small deeper setup. Bar high here is at 65 cents. Notice today actually we do see an increase in volume, and this is generally positive. Now Dynamite is one of the strongest stocks, but unfortunately today we see a range expansion on the downside on increased volume. So on a short-term basis, stock not likely to perform, and if you have a position, this is a time where you should exit. It actually broke the low of this bar, which is generally negative. Again, if the stock can continue to just trade sideways very much like this, that will give us a opportunity to go long subsequently. But at this point in time, it is important to just observe and look for further price developments to confirm the bullishness of the stocks.